Hi, welcome to the Quantity Surveying Studio. By the end of this video, you will get to know the difference between margin, markup, and profit. These are the three terms which most professionals in any industry tend to get confused with. So if you have a clear idea on these three terms, you will be able to price your projects properly and more clearly with better clarity. So let's understand these three concepts with the example that I have made. So here if you see, I have made a table here called costing. Now your direct cost is your total material cost plus labor cost plus your tools and plants and machinery cost. So here in this example, we are preparing the budget and getting to finalize our direct cost to be 1025000. So your management decides to price the project with a markup percentage of 30%. So the meaning of that is you are increasing your price direct cost with the markup percentage and then selling that particular project or product. So if you see the formula, your bid amount will be 1 plus markup percentage into the direct cost. Here in this formula, it will be 1.3 times your direct cost. So 30% of 1.025 will give you your markup amount, and you'll be adding that to your direct cost to get 1332,500. So this will be your selling price or your bid amount. So the difference between your bid amount and the direct cost will be your indirect cost. That is, you will be having your overheads, your head office charges or your establishment charges and your profit. All this will be included inside your indirect cost, and that amount will be the difference between your bid amount and the direct cost, taking in account that markup is 30%. So now if you see here, you might think that since your markup percentage is 30%, your net profit is also going to be 30%, but that is not correct. Here if you see your margin or your gross profit percentage, that is going to be 23.08%. The formula of that is your bid amount minus your direct cost divided by your bid amount into 100. So if you do that math, you will be getting 23.08%. So for a markup percentage of 30%, your margin or your gross profit, it is gross profit, not your net profit. The difference you will understand in this when I explain the last table. So 23.08% is your gross profit. That is your money that you are getting after you have done your expenditure on your direct cost. So that is going to be your gross profit. So now in this example, this is another same way you're preparing your costing sheet, but this time after finding out your direct cost, your management is telling, okay, now let's sell this as per our sell it based on a margin percentage of 30%. Here it was markup percentage of 30%, but here your management decides to sell it on the basis of a margin percentage which is 30%. So that time your bid amount is going to be different, because the formula of your bid amount will be your direct cost divided by 1 minus your margin percentage. So when you calculate it, you will be getting a bid amount of 1.4 million, 1464285.71. So difference between your bid amount and direct cost is going to be your indirect cost, which here is 439285.71. And then when you calculate your markup percentage, it will be 42.86%. Here the formula here is going to be different than your margin percentage. That is your bid amount minus your direct cost divided by your direct cost into 100. If you see your margin percentage, it was divided by your bid amount. That is for your selling price. But here it is divided by your cost price or your direct cost. So that is the main difference between margin percentage and markup percentage. So basically here, if you see 42.86% is of your direct cost is what you're adding up to your direct cost to sell your project or your product. Margin or gross profit percentage is the percentage which you are getting after, it is the percentage on your bid amount that you get after expending on your direct cost. Now, if you see the last table, imagine you have finished your project, it is completed. The total expenses that you have done for the project, your direct cost is 1.025, and the total expenses you have done, you have made for your overheads, your establishment charges is 425,000. And finally, after completing the project within the completion period, the revenue or the contract amount that you're getting is 1.85 million. At that time, if you see, your net profit is going to be 21.62%. The formula here is your revenue minus your overhead establishment charges minus your direct cost. That is purely your profit. That is called your net profit. Here, if you see the margin, or the gross profit is including your overhead establishment and your profit. That is your gross profit. When you minus your overhead, all your expenses, that is including your overhead, establishment charges and direct costs, then you get your net profit. So the net profit percentage will be your revenue minus your overheads minus your direct cost divided by your revenue into 100. So that is going to be your net profit percentage, or your net profit is going to be your net profit, that is 21.62% into your revenue. That means 400,000 is going to be your net profit that you have attained in this project after all your expenses, all your indirect cost, all your direct costs. Hope the three concepts are clear. You can just go through the formulas which I have put here. So if you have any doubts, to share that in the comment section. Please do subscribe to this channel if you have found it to be useful. Until another informative video, keep learning, keep reading, stay safe, take care, and thank you for watching.